Hello guys, welcome back to my channel. Happy New Year, and I wish you guys have a prosperous 2023, and I hope you guys also enjoyed the holiday. But now the holidays are over or is over. Let's get back to work. So in this video my focal point will be on point of interest in the market, and this is all derived from the understanding of supply and demand zones in the market. Why these zones form, how these zones form, also how to find them, and to know which one holds a higher probability. So moving forward, we'll see how we merge these concepts together with the idea of structure, and afterwards we'll start to introduce the idea of Wyckoff. As you look at my charts, if you're a newbie or if you're just starting smart money concepts and you want to learn smart money concepts, mainly this video is mainly for beginners or people making a switch from retail to SMC, institutional trading basically. So if you don't understand why I mark up this here or I have this place highlighted, don't worry about that. With time, you get an understanding of what supply and demand zones means. So in the previous videos, I talked about market structure and I introduced a few ideas on market structure, how price delivers, how price is fractal. I think I talked about candlestick structure, swing point, and what I call the M block. I only teach that particular concept on my private mentorship, which is just $30. Don't worry about joining it. You can still learn a lot from my free videos on YouTube. So all these concepts I have taught so far, when you put them together, you can form a bias and a direction to where you believe price might go to and where your buying and selling will happen from, to happen in those supply and demand zones basically. Now let me give you a graphical explanation rather, on how supply and demand zones and the idea behind it. I know many mentors teach it differently on YouTube and on private mentorships, but the original idea behind supply and demand, which was I think created by the man himself, ICT, the real idea behind it is that since we know that large banks, they have all the liquidity, they have all the money, we don't move price. Our small $1,000, 5K, even 10K, 100K dollars, you won't move price. The big banks have enough liquidity to move price and engineer liquidity. So we see them like places that has two equal lows, takes out this liquidity, and basically those demand zone is the last down move before the up move. The last down move that takes out liquidity here, because we all know the retail space, especially to newbies who just come in to forex and hop on baby pips. This is basically what they will teach you. Buy those two touches. I've forgotten retail stuff, but yeah, they buy on double bottom, head and shoulders, whatever. I've forgotten. I don't trade that way anymore. Think I was lost trading the retail way till I met smart money. So the last down move, and by the way, I'm not saying retail doesn't work or retail trading is trash or retailers like retail trading, retail traders rather. Which retail traders are, I don't know why I can't say it out loud. Retail traders are not profitable. They are profitable, but it's just smart money concepts gives me in particular more refined entries and more RR returns. So yeah, I was saying the last down move before the up move, this zone left here is the demand zone. This space left here is the demand zone. The whole concept is that institutions will sell down to liquidate people who want to sell this breakout. They see price break this low, they think price wants to go down, and it comes back and stops them out. Because if you know, we are all taught to keep our stop loss above every previous high. So they have been liquidated at this point. So this point and this zone left here is called demand zone. The idea is that the institutions will probably sell and they will be on a loss on this trade. They'll be on a negative to take out most buyers at this point, sorry, most sellers at this point. Comes back, liquidates them that sold and place their stops above here, and comes back to mitigate those losses that is left in here. Imagine they bought or they pumped about $1 million in here just to take them out, and this their buy positions is, let's say, in profit $2 million. To close this sell they took, sorry, to close this sell they took here, they will have to bring back price to this zone to close those positions, mitigate those losses, and go their direction in profit. I didn't create this idea, like I learned from ICT and I learned from MentorFX Anton. So basically, I'm not claiming to be any genius or something. So yeah, we see price come back to the zone and goes up. This is a demand zone, and this is that liquidity grab. Price breaks, comes back to mitigate those losses on this last sell down, and goes up. Some people also adopt the concept of breaker block, also the concept of other blocks, but at the same time, we all know that it's happening on this entire zone because you can't know the exact position where they pumped those cells. So yeah, at this zone, we now adopt the idea of Wyckoff confirmation entries and chalk whatever as any way of confirmation to enter trades or to place. Yeah. So the opposite side, this is a bearish market, liquidate them, break of structure. This whole zone is now the supply zone. I will quickly make examples on the chart, and don't forget this can happen across many time frames. It happens in 4 hour, 1 hour, 2 hour, 5 minutes, 1 minute because price is fractal. But basically, higher time frame supply zones hold more probability than the lower ones, and that is why I insist on people doing top-down analysis, like going from the top down from monthly. It's not like you trade from monthly time frame. You just make your analysis from there down to the lower time frames. Before I hop into the live chat. By the way, this is Euro USD, my favorite pair. Demand zones. Supply. Okay, this is a perfect example of a demand zone. And this is the daily time frame, so I'll go down the lower time frame to see where this same thing occurred. Okay, let's go. 3 hours. Beautiful. Hold on. I'll be there in a second. My friend just texted me, so trying to text back. Okay. All right. So what we see here from the previous videos, I talked about market structure and how swing points are created. So this is the higher high, higher low, three break structure here. Yes, it did. Higher high, higher low, higher high. I think I need to go higher on time frame. Let's go with 4 hour. Okay, so we see these swing points and higher high, sorry, higher low, higher high. Yeah, this zone is where many retail or unexperienced trader who are basically buying from the last touch. Remember one time I was reading, is it Naked Forex? I think it was one book I was reading where it says buy all these basic beginner stuffs. We say buy on every touch, create liquidity, and you see the smart money institutions they sell really hard to take out buyers here. Sell really hard, create another liquidity because this is a low. Many people would have been buying from here to maybe see price go up. Liquidate them, and this is the demand zone. This whole point that price left, it comes back, mitigates, and shoots up. Leaves a whole bunch of imbalance where I'm expecting price to retrace back into. And that's basically them mitigating those sells they took or those losses they took to sell this market downwards to liquidate buyers so that they can basically take price freely upwards. And let me look for the reverse of demand zones. Let me look for supply zones. I think it's better I go to. Okay, never mind. And you can see the previous trades I took around September till December, I think. And perfect example is this trade I took back in September. I think September 19th. I held it for 3 days. It was my best trade last year. I made I know you guys will think it's cap, but I made over think 15% on just this trade, and this other trade too was about 8.5 RR. This is a perfect example of supply zones where I took my trades from. I don't think they will let me go back that far back in time. Then around September, price started. I got on 8.6 RR around October. October 2, I made 2%. I'm looking for the perfect example of supply zones to show you guys what I'm talking about. But I can't seem to find one of recent because EU has been buying since November, I think. Yeah, perfect. You see them sell really hard. They sell really hard. Price retraces back. This occurs on all the time frame. Taps into the whole supply zone and pummels down. But I'll still look for more examples. Let's check AUD USD. One of the pairs I'm watching of recent. Okay, so this is a perfect example. I'm looking for price to start giving me that distribution schematic or reversal pattern, whatever you call yours. This is the last. Okay, let me make it bigger. Yeah, this is the last low. This is that liquidity grab. Price comes, takes out people that had their stops here and breaks down violently. Started to come back into those supply zones, and now we're looking for my confirmation entry using Wyckoff second break rule, my second break rule, which I don't share on the public channel. Sorry, you have to pay to get more knowledge. Duh. Alright. So yeah, I'm looking for, let me give you a free analysis. I'm looking for a break of this low and a retracement back to those supply zones to take this particular pair down. This is AUD USD. This is what I'm expecting it to do. Maybe in the future you can check it if it's gonna happen. I think it will take some time because this is the 4 hour time frame. It might take weeks before it actually happens. But that is why it's good to be patient and wait for those setups, those high probability setups, which comes from the higher time frames, rather than be in the whole mess being liquidated by price. Alright. So I hope that's enough to shed more light on supply and demand zones. I'll be making more videos about it in the coming days. So stay tuned, subscribe to the channel, turn on post notification because I really see no point on hiding these concepts. Because I myself I struggled when I started. I didn't have money to pay for mentorship programs. I think around 2020 mentorship programs was really expensive. I don't know why. It was fucking expensive. I don't want to cause. Shouldn't cause. It was so expensive, so I couldn't get the right knowledge. I was depending on YouTube, and the knowledge out there that time was pretty basic. So yeah, I'm doing this to at least help newbies like I was a newbie too. Stay tuned for more videos. Peace, guys. I'm out.